We don't see enough growth in StubHub. It's not being valued properly. It's not core to the company's business. All these kinds of things. Who are they selling StubHub to? Ironically, the same guy that started StubHub. So what's interesting is the multiple. That's basically a 1x GMV multiple. From a revenue standpoint, a little under 4x revenue multiple. Those are actually somewhat low. eBay sold StubHub to Viagogo for about $4 billion, all cash deal. The background is that Elliott Management, the activist investor hedge fund, which has also been an activist in AT&T. One of their big things was that the different business units within these companies are not being valued correctly. Same thing in AT&T if you look at their DirecTV and Time Warner acquisitions. And the same argument was kind of being applied to eBay, particularly if you look at things like StubHub. And so they were basically saying, hey, we want you to sell eBay. Why don't you look at selling off StubHub? We don't see enough growth in StubHub. It's not being valued properly. It's not core to the company's business. All these kinds of things. Devin Wenig, the now former CEO, who was CEO at the time and had been CEO for 7 or 8 years. He had been with the company for a long time. He left. He left earlier this year. He was also on the board of GM. And I think the guy was doing a pretty good job at eBay. The stock price and the investors would certainly beg to disagree with that point. But Devin did not agree with Elliott's plans. And he said, look, I think it's better if we part ways amicably. And he stepped down as CEO. He didn't want to fight it. A few months later, they had an interim CEO, and they are now selling StubHub. Who are they selling StubHub to? Ironically, the same guy that started StubHub, this guy named Eric Baker. And apparently the story is that he started StubHub in business school, and he was a co-founder of StubHub. He didn't carry on, and he wasn't actively at StubHub when it was acquired in 2007. I think it was acquired in 2007 for $310 million by eBay. So it's a pretty good return, right? They bought it for $310 million. They are selling it for $4 billion. Not a bad 12-year return. Eric, meanwhile, started this company called Viagogo in 2005. StubHub was acquired in 2007. He started Viagogo in 2005, primarily to take the similar business model of StubHub and expand that abroad and go to Europe and go outside of the United States. And so it says here they've raised $65 million. Eric has said publicly that the business is profitable. And so it's very surprising to me that they were able to raise $4 billion in cash to go buy StubHub. But I presume that they have a profitable business, hopefully good growth behind that business. And we're then able to go get some, I'm sure there's a lot of debt behind this acquisition, but some debt, maybe some equity, I don't know, probably just a lot of debt. And they were able to go and make this acquisition of StubHub. So, I think there's two things to dig into here. One is $4 billion a good price? Here's a good chart showing StubHub's GMV and revenue. So you can see it's lumpy, which is cyclical and seasonal in nature, but it's also kind of trending downward. And so that was, hey, we have sluggish growth in StubHub. What do we do? It kind of seems that it's hit a wall. Let's sell the business, right? Devin differed. I think Devin had some plans about how they could reinvigorate the StubHub business. And, but doing over $4 billion in annual GMV. So what's interesting is the multiple. That's basically a 1x GMV multiple. From a revenue standpoint, they're a little under 4x revenue multiple. Those are actually somewhat low multiples on the business. And so I don't think that this is a great deal. I think they wanted to sell the business. This happened in a pretty accelerated timeline. In September, he stepped down. It's December. They sell the business in 3 months. You sell a $4 billion business in 3 months. I mean, literally, The guy must have stepped down. The interim CEO came in, must have hired a broker right away and started a process to sell the business. Clearly, that's what Elliott Management wanted. I don't think they got the best deal for the money on this. A 1x GMV multiple just seems very low when you look at other comparables for other marketplace-driven businesses. You can normally expect to see at least 2 to sometimes 5x GMV. It all depends on, what the take rate is and obviously is it profitable or not, and what do the economics of the business look like. Not all GMV is made the same, but 1x is definitely on the low end of the market, especially given StubHub's dominance in the space. There are some smaller, like Broadway focused kind of like marketplaces that have gotten, maybe $20 or $30 million here or there. But there's a couple steps missing here, right? Unless the business is actually losing a lot of money, which I don't think it is. Why are you selling it at a 1x GMV multiple? That seems kind of odd. That's point number one. Point number two, and I don't know if this was on the table, but the thing that eBay has always struggled for in whether it's their traditional marketplace or I'd say even if it's with StubHub, is that eBay touts itself on only being a marketplace in the sense that they don't compete with their sellers. And if you remember, Jeff Bezos had called out eBay in their annual shareholder letter that came out in like April of 2019. And Jeff Bezos was knocking how fast Amazon's growth has been, marketplace growth compared to eBay's. So then Devin Wenig responded to Jeff Bezos. So while I appreciate the ink dedicated to eBay from the CEO of the company, not focused on competition, I think I'll dedicate my letter to customers' purpose and strategy. We don't compete with our sellers. We don't bundle endless services to create barriers to competition. Those last two parts of this, that's very key to the eBay thinking, at least at the time. eBay isn't being a one-piece seller like Amazon, right? They're not creating their own white label products. They're not, as we've spoken about, saying, hey, you're a third-party seller. Give me your purchase order for these items so I can verify that they're legitimate. And then I'm going to go directly to the manufacturer in China and cut you out. Yeah, that's not cool. But Amazon actually has been doing that a myriad of times. I'm sure they're trying to clamp down on that, not do that anymore because they've gotten into trouble for a number of reasons on that. eBay does not compete with their third-party sellers. eBay is not acting as a one-piece seller. So similarly, if you look at the ticket industry and you look at a Ticketmaster, for example, Ticketmaster has all these lockup deals with all of the venues and the establishments, right? And then they went to go buy Live Nation to then do all the shows and run and actually put on a lot of the concerts, right? And then work with and contract out with the artists. So they've gotten very vertically integrated into this business. And so eBay has not wanted to do that. That's like very much so against the ethos, at least with Devin at the helm of the eBay ethos behind how they operate. So that was pretty interesting to me. I think for those 2 points, right? If that came on the table, I think now StubHub would have a lot more tools at its disposal to secure inventory, to go negotiate directly with suppliers, being say venues or content, people that put on these concerts. How can you secure inventory as a 1P reseller and then also let the 3P marketplace come in and complement the two? But if eBay and StubHub don't want to put their balance sheet, don't want to compete, it's two things, right? Like you're putting your balance sheet at risk, but there's also some upside. Amazon doesn't really use it so much for the upside. They really make the margin on the 3P marketplace, but they use the 1P, the white label brands to just make sure that they are driving immense value to the customer and it's kind of break even, that business. But then they make their money on the marketplace. So I don't know if it's a similar model for StubHub, but I think how you use the balance sheet, and I get the sense that Viagogo has tie-ups in Europe. And I get the sense that Viagogo is doing this model where they are establishing relationships to secure inventory in a linear way and in a marketplace way. I know they have a number of tie-ups abroad where their business is based. So I think if Viagogo brings that hybrid kind of linear marketplace model to StubHub, I think that's a big win. There's obviously other things that I'm sure Eric Baker has up his sleeve to come back to the US and merge these two things. I don't think there's as much, maybe there's some customer overlap, right? If you're operating in Europe, those network effects are pretty kind of localized, at least in a country or a region. You don't necessarily have a lot of customers and suppliers that are now cross, country between Europe and the US. Maybe some on the supply side. But on the demand side, it's probably pretty compartmentalized, from a geography standpoint. So I think eBay, they had a lot of pressure from the investors. They could have gotten more money, but maybe there's just a limited amount of people that were interested in buying the business. Viagogo, being a smaller company, definitely coming up with a lot of money to buy this business. Certainly a lot of debt involved. If they were able to sell it to, say, a large other tech monopoly, then I'm sure they could have tried to get a bigger multiple. But I don't think seems like the larger tech monopolies were that interested in the space, especially when you have the presence of a Ticketmaster, which is so dominant already in the industry. So kind of interesting how this netted out. I don't know if it really netted out as well as Elliott expected. I guess they didn't have to sell the business, but I feel like at this point, they pretty much ejected the CEO, Devin, and then they started this process. They became an activist investor pretty much on the premise that eBay should divest its assets like StubHub. And then if you go through the process and the results don't come back, say, as good as you hoped, but you still got a pretty decent result, yeah, you're probably going to take it. So honestly, I think it's a good win for Viagogo. It's so-so for eBay. I don't know. I think they could have gone better had they maybe just empowered Devin more to maybe show some growth or try to take some more risks with the business and then maybe try and sell it. But because it was kind of the revenue or the GMV was stagnant and possibly slightly declining, that obviously didn't help the sale either. Yeah, very interesting to see how this worked out. From an Elliott standpoint, I don't know. I don't think this is a slam dunk. I think they have a much stronger argument with the AT&T scenario. That's much more complicated in terms of how do you actually execute and divest those assets, because they're so intertwined and they're so massive, and who's going to buy them? I don't know. Who wants to buy DirecTV at this point, or Time Warner for that matter? I don't know. That was $100 billion for Time Warner. And I think like $60 billion for DirecTV. No one's paying $60 billion for DirecTV anymore. That's so much. So they might have the right ethos, but the execution of it, I don't know. That's going to be tough. I would not put all my eggs in that basket, even though I think directionally, at least with AT&T, I agree. I don't necessarily so much agree with the ethos of this in eBay's circumstance, though. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.